Most people think the stock market is where rich people go to get richer because they already have money to spare. That is not the real reason. The real reason is far more uncomfortable. The stock market makes the rich richer because of how they think, not how much they start with. And once you understand the difference, you will never look at your own money the same way again. Here is the truth nobody tells you. Anyone can open a brokerage account. Anyone can buy a share of a company for the price of a coffee. The barrier was never money. The barrier has always been psychology. Let's start with the first habit that separates the wealthy from everyone else. They think in decades, not days. When the average person invests $50 and the market drops the next week, they panic. They pull the money out. They tell themselves the market is rigged or too risky or not for people like them. But someone with a wealthy mindset sees the exact same drop and does nothing. Not because they are fearless, because they understand something most people never learn. Short-term drops are noise. Long-term growth is the signal.
The stock market has never had a single 20-year period in modern history where it lost money. Not one. But almost nobody holds on long enough to see that play out because our brains are wired to react to today, not to a decade from now. The second habit is even simpler and even harder to accept. Rich people invest before they feel ready. Most people wait. They wait until they earn more. They wait until they pay off debt. They wait until they understand the market better. They wait until they feel safe. But waiting for certainty is exactly how decades disappear. Compounding does not care how ready you feel. It only cares how early you start. If you invest a small amount today, it has more time to grow than a large amount invested 10 years from now. Time is the one advantage that money cannot buy back. The wealthy know this instinctively. They would rather start small and imperfect than wait for a moment that never comes.
Now here is something that will change how you see every rich person you have ever envied. It is not their income that made them wealthy. It is their relationship with delayed gratification. Picture two people earning the exact same salary. One spends every extra dollar on things that disappear the moment they are used. New shoes, another meal out, the newest phone. The other takes that same extra dollar and buys a tiny piece of a company. Nothing looks different on the outside. Both people still go to work every day. Both people still see the same number in their bank account on payday. But 10 years later, one of them owns a growing asset that works for them even while they sleep. The other owns nothing but the memory of things they no longer have. The gap was never the salary. The gap was the decision made every single time extra money showed up.
This is the part where most people stop and think, well, that sounds simple in theory, but the market is unpredictable. Nobody knows what will happen tomorrow. And you would be right, nobody does. Not the wealthiest investor, not the smartest analyst, not the loudest voice on financial television. But here is the twist. The rich do not try to predict tomorrow. They try to be positioned for every possible tomorrow. They stay invested through the uncertainty because history has already shown them what happens to those who stay versus those who panic. Let's talk about fear for a moment, because fear is the real reason most people never build wealth through the market. Fear of losing money keeps people out of the one place that has historically built more wealth than almost anything else. But here is what almost nobody says out loud. Keeping your money in cash is not safe. It feels safe. It is not the same thing. Inflation quietly eats away at cash every single year, whether you notice it or not. The rich are not more comfortable with risk because they enjoy losing money. They are comfortable with risk because they have done the math. And they know that staying out of the market long term is the bigger risk. Now let's get into the habit that ties everything together. The wealthy automate their investing so that discipline is never required.
Willpower runs out. Motivation fades. But an automatic transfer that moves money into an investment account every single payday does not care how you feel that week. It does not ask permission. It simply happens. This one habit removes the emotional decision entirely. You are no longer choosing between spending and investing every single time you get paid. The decision was already made once, and it repeats itself forever. quietly building wealth in the background while your attention is somewhere else entirely. Here is a story that captures all of this in a single image. Two brothers grow up in the same house with the same education, the same starting income. One of them buys a new car every 3 years. The other buys the same modest car and instead puts that difference into an index fund every single month, without fail, for 20 years. He never talks about it. He never brags about it.
On the outside, his life looks less exciting. But 20 years later, one brother has driven 6 cars into the ground. The other owns an asset worth more than either of their houses. Same income, same years, completely different destination. The difference was never talent or luck or an inheritance. It was a single repeated decision, made quietly for 2 decades. This is the part people miss when they look at wealthy investors and assume they must know some secret formula. There is no secret formula. There is only the willingness to do a boring, unglamorous thing for a very long time, while everyone else is looking for a shortcut. So if you take one thing from this, let it be this. The stock market does not check your income before it lets you build wealth. It checks your patience. It checks whether you can sit still while everyone around you is reacting to headlines. It checks whether you can start before you feel ready, and whether you can keep going after a bad month, a bad year.
The rich are not a different species. They simply made a decision earlier than everyone else, and they kept making it, quietly, for longer than anyone else was willing to. The market has been open this whole time. The only real question is whether you are willing to think in decades, while everyone else is still thinking in days.